Hello friends, this is Upain. Welcome to my channel Financial Nirvana. Today we will discuss about ULIP versus mutual fund and term insurance. One of my friend approached me and he asked me whether to invest in ULIP or mutual fund. I asked him very simple question. Is your requirement is to grow your money or you are also looking for some kind of insurance coverage? He was confused. He couldn't answer my question. And I can understand the reason very clearly because he wasn't sure between ULIP and mutual fund. His focus was to invest his money in one of the instrument. Friends, some of these questions look very simple, but lack of right knowledge results into wrong choices being made by the investors and ultimately not attaining the goal or the output what they are looking for from their investment. I always suggest never mix your investment and insurance because the purpose of both investment and insurance are different and the output what you are going to get is also going to be different. So let's understand the difference between ULIP and mutual fund that will help you to make the right decision for your investment. Before we go in detail about ULIP and mutual fund, friends, I want to make this disclaimer. Before making any investment in any of the options which are available, please consult your financial advisor to take the right opinion before you make an investment. So let's talk about the difference between ULIP and mutual fund. ULIPs, Unit-Linked Insurance Plan, also known as ULIPs, are insurance products that combine investment and protection against risk. A ULIP holder pays a periodic premium. Part of the premium is for life insurance and part of it is invested just like in a mutual fund scheme. This continues for many years. The investor can choose the type of investment. Investment can be made in debt or equity or in both. The investors can choose depending upon his or her risk profile and financial situations. ULIPs are neither 100% investment option nor 100% insurance schemes. They fall somewhere in between. Talking about mutual funds. Mutual fund schemes are primarily investment products. Investors can invest in money market instruments, corporate bonds, government bonds, and equity. They do not provide insurance cover, though there are few exceptions wherein we have mutual funds with the insurance coverage also attached to it. But those are only exceptions. So in case if you're looking for insurance along with the mutual fund, you can go with that. Let's go a little bit more deep in the difference between ULIP and mutual fund. So friends, the first point we have already covered. Going to the second point, ULIPs offer flexibility in investment options. You have the flexibility to switch from a debt-oriented option to an equity-based plan. It can be switched without tax implications, wherein a mutual fund scheme usually follows a theme, equity, balanced or sectoral. The allocations are pre-decided up to a large extent. You can switch between one fund to another fund, but consider the mutual fund taxation. The third difference is the plan holder can withdraw money. There is usually a minimum withdrawal amount, but the value of the fund should also not fall below a pre-decided amount. There will be a charge to it. A fully withdrawal of the policy can be done before the maturity date, subject to a surrender charge and in some case tax. Different mutual funds have different exit method. In many schemes, an exit load or a fee is charged if the investor withdraws within a specified period, usually a year. Mutual funds are much more liquid in comparison to ULIPs. We'll go through few more differences between ULIP and mutual funds. The fourth difference between ULIP and mutual fund is ULIP investment can be used for Section 80C benefits in tax calculation. Maturity receipts of ULIPs are considered to be tax exempt, wherein mutual funds investments cannot be considered for Section 80C benefits in tax calculation except for ELSS funds. ELSS is nothing but its equity linked savings scheme funds, which has a lock-in period of 3 years. And Using that, you can actually take a tax rebate under Section 80C. The invested amount in ELSS gives you really a far better return as compared to many other tax rebate instruments. Let's talk about equity mutual funds and debt mutual funds and how the taxation works for it. Equity funds. Capital gain tax is applicable if you withdraw within 1 year of investment. Post that, withdrawals are exempt from tax. Debt mutual funds withdrawals are taxed at income tax rate applicable to you if you withdraw within 3 years. Withdrawal after 3 years attracts a tax of 10% tax without indexation or 20% with indexation. Friends, if you want to know more about indexation and tax, please write a comment and I can make a video on that. The fifth difference between ULIP and mutual funds. There are many expenses which makes it costly. Premium allocation charges, policy administration charges, mortality charges, fund management charges, and surrender charges. Wherein in mutual fund, usually there are three types of expenses. Transaction charges, it is a one-time if your bank or advisor charge. Fund management charges, and exit load. The exit load is only applicable if the investment is withdrawn before a specific period, usually it's 1 year. The final difference between both the investment instrument is, and in ULIP, premium has to be paid regularly or as a lump sum. In mutual fund, investments in mutual fund can be made anytime or in the form of regular SIP investments. Investment can be made only once also. So friends, we have gone through the difference between ULIP and mutual fund. I hope this will give you a clear understanding between ULIP and mutual fund, and it will help you to make a decision in making right choice to invest your money. The question again comes, are you looking for investing only to grow your money, or are you also looking for investment instrument which has a component of insurance, or should you invest only in growing money investment instrument and buy a separate insurance plan? So that question remains there. Should I invest in ULIP or should I go ahead with a mutual fund? So when I clarified from my friend, he was looking for both the options. One is that he wants to grow his money, and of course he wanted to buy the protection coverage. So I gave him three options. One is that either he can go with a combo model wherein he has both investment as well as insurance, but it will not give him a better return. In this case, ULIP is an option. Or he can go with complete investment to grow his money. In this case, he can only invest in mutual funds. Or if he wants to also buy an insurance coverage for his family, then portion of his money he can allocate for mutual fund, and rest he can actually buy a separate insurance coverage. And nowadays, term insurance plan has a very good option for investors, because with a minimum amount you can have a very large coverage for yourself and your family. So investment in ULIP, is it a good or bad? It is an option, friends, available in the market. ULIPs are better structured today than it was in the past. But the kind of flexibility and choice that you get in mutual fund is not available in ULIP. I feel still there is a room to reduce the expenses both in mutual fund and ULIPs. The worst part about ULIP in my view is commission structure, which is still front loaded more in initial years. So there is no incentive for an agent to service and advise after the initial years of the investment. So if you personally ask me, I would always advise to separate the investment and insurance, because it not only helps you to attain your goal, but it is also very clear for you and your family about what is your end goal and what you want to attain. Investment definitely primarily focused to grow your money, and insurance is focused on protecting your family or covering your family, right? So it is very important that you separate. But should we separate and then buy it, or should we just focus on one? My Of course, the wise option is to kind of focus on both, but buy a separate plan for both growth and as well as protection. So hence friends, for an intelligent investor, it still makes better sense to invest in mutual funds and purchase a term insurance plan which will meet both of your objective. You'll able to see your money growing and also your family is fully protected and fully covered. So if you ask me my choice, I would definitely go ahead with mutual fund plus term insurance plan, and that will help me to kind of meet my commitments. So in case if you want to invest in both mutual fund and insurance plan, here are the 4 things which I definitely want all of you guys to focus. Number 1, selection of the appropriate mutual funds as per your risk profile. Number 2, current insurance cover. What is the kind of coverage you are looking for your family? Definitely makes sense, because when you're buying an insurance plan, you definitely want to cover your family to an extent you want them to be covered, the right amount they are covered with. The third one is number of financial dependents you have or you will be having in future. And the fourth one is investment goal and time horizon. Friends, the goal is very, very important, because any investment you make, you need to have a very clear objective and goal in mind. Are you investing this money for your child's education, for your child marriage, for your retirement, or maybe any other goal? But you need to be very clear about your goal. And parallelly, the time horizon is equally important, because for any investment to grow, it's like a plant, right? When you give time, it will grow. So hence you need to be very clear about how long you want to remain invested and when you need your money. So with this, I will end this video, friends. Uh, Again, the disclaimer, please consult your financial advisor before making any investment decision on ULIP or mutual fund or any other investment instrument which are available in the market. Friends, I hope this video has helped you to clear your understanding between ULIP and mutual fund, and it will help you to make the right decision in your investment. Thank you for watching the video, friends. And if you think the information shared in this video was helpful, then do click on like, share it with your friend and family, and finally subscribe my channel. Thank you. Bye for now.